Rohan, thank you so much for joining me for another TA session. I appreciate you, brother. How are you doing?
I'm doing great, man. Thanks for having me. Feels great to be back, OBR.
Yeah, baby. We're happy to have you. Happy. It's definitely our pleasure. And thank you so much for joining me again. So, guys, we've had one heck of a week. Big week. Very big week. And that is because we have been in a downtrend for the better part of the past 2 weeks. And it has been slowly dropping. And I believe it's going to be dropping until the Fed meeting coming up here soon. So we could see some more blood in the streets. That being said, one of the major indices that got hit, one of the major ETFs, that got hit was QQQ. The tech sector got a whooping this week. So, Rohan, if you don't mind, could you go over the top 10 holdings of QQQ before we dive in?
Yeah, absolutely. So coming in at number one with 12.04% of total assets should come as no surprise. That would be Apple. Then next on the list with approximately 8%, Microsoft, Amazon with around 7%, Facebook at around 5%, Alphabet Class A and C comprises 9% total, Comcast at around 2.9%, Intel at 2.5%, Cisco Systems at 2.3%, and Amgen hovering at around 2%.
Thank you so much. And guys, another thing that we are focusing on this week in regards to tech ETFs and tech as a whole, and this may be a little bit more specific to tech, is the Vanguard ETF, the Vanguard Tech A ETF, specifically VGT. And I am very excited to go over both of them because I have positions at both of them. And we'll go over the technicals in a second. Rohan, can you provide me with the VGT holdings as well?
Absolutely. So essentially, you'll see a lot of overlap between VGT and you'll see a lot of overlap between that and QQQ. Let's go right into it. Apple Incorporated, Microsoft, NVIDIA, Visa, PayPal Holdings, Adobe, MasterCard, Salesforce, Cisco, and Intel.
There we go. So some definite similarities there in regards to large holdings among the top FANG stocks as well. So that's going to be very important moving forward here because a lot of those FANG stocks got hit pretty bad this week. But today we are focusing on QQQ because one of the conversations we are going to be having this week is long-term investing and trading, entries and exits. And one of my favorite ETFs to trade right next to SPY is QQQ. So let's talk about what's going on this week in the tech sector, or the large majority of the tech sector. So QQQ rounded off at 382 in the highs. We are currently looking at the 10-day chart. All right, so the better part 2 weeks. This is extremely important. The majority of the pullbacks that we see in SPY and QQQ are not this elongated. As a matter of fact, they're usually gap downs. They gap down over 2 to 3 days, and they gap down pretty aggressively for SPY, for example, it's about 10 to 15. On the high side, it's about $22 a share based on the averages that I have, or the trading range that I have for the drops. That being said, we get a very quick drop, but just as aggressive of a retracement back up to previous highs. This time around, we're bleeding a little bit more. We're taking a little bit more time with this. So again, we've got the Fed meeting coming up. We've got a lot of news coming up. And I believe the market's just really indecisive. It doesn't want to make any big moves until the Fed speaks. And then we'll see what Jay Powell has to say. And then we'll be moving forward. Rohan, any comment on that?
Yeah, absolutely. So not specifically about the the Fed meeting, rather some advancements in technology. Last week, we saw Facebook develop the new eyeglasses, some new technology developments there. If you guys have been keeping up to date with Apple, they dropped the new AirPods and the iPhone 13. So there's some large revenue drivers that are coming in for some very, very key corporations. Facebook and Apple comprise the QQQ of approximately 17.36%. And as these things, continue to develop, all good. Got that buzz, mister. See you?
Sorry about that.
But as these technology developments start to implement and alter the course of what we know technology as today, this has been growing exponentially. And there's no doubt about that. So with the new iPhone coming out, with iPhone sales impacting Apple's revenue and stockholder confidence, it will start to definitely impact the QQQ. Say a large majority of it is Apple.
Yeah, I very much well said. Sorry for that Discord call, guys. I can't control the multiple volumes going on with this, but to add on to Rohan's phenomenal point, we got hit very hard. So we can look at the technicals for QQQ, and we're going to cover that real quick, and then I'm going to pull up some of those tech stocks so that we can kind of see why QQQ has gotten so much selling. So let's look at the 180-day chart. This is where I live on as a long-term trader. I love the 180-day chart. I also got to a point this week where I wanted to see a 3-year, and I wanted to see a 5-year. Excuse me, sorry. For my long-term trading. And I'm trying to figure out year over year just how well SPY, QQQ, XLF, how these ETFs are doing. The Vanguard ETFs, VTI, VOO, VO, VGT specifically. Trying to see just how well these Vanguard ETFs and these major ETFs are doing annually, right? So we've got all these different major dips, right? And this is on a 5-year chart. We're bringing it into 180. We've got multiple major dips, large dips that all are so juicy to a long-term trader. And that's something that we're going to be going over more in depth this week. But that being said, we are really pulling down here. I've got multiple lines. We're going to go over these real quick. We got the 200-day EMA, which QQQ on the 180 time frame is touching and has broken below, which is very interesting. Very curious to see what it moves down to next. So 40 days been following the grind down and the sell-off down, and the 100-day we have broken below it and closed below it. So right now pushing the 200-day EMA. That's usually when we pull down a little bit below it, maybe let's say 370. And then we start to really take ourselves back up and continue that big bull market that we've been in for so long, which I'm so happy about. So, Rohan, give me one of the top stocks in QQQ, and let's pull that up and look at it and see what it's done this week.
How about we look at Microsoft?
Okay. Actually, Microsoft, in regards to QQQ as a whole and the rest of the tech stocks, has unbelievably held a lot of its value this week. The dividend was increased to my knowledge, and then there was also stock buyback to my knowledge. I could be getting that wrong, but great news for Microsoft, making it even more of a freaking powerhouse. And this past week, it did hold its value because it fluctuated so much. We opened up right at about 305 on Friday. That was huge. OBR was all over swings for Microsoft from the day prior. It did so well after selling off in the morning. Rohan, any thoughts on Microsoft?
So I have some broad market news for Microsoft after looking at it. So you're absolutely right about all the points that you had about Microsoft, that stock buyback as well as some other things. So in addition to the Apple iPhone 13 and the Facebook Oculus new eye lenses, what we have is a new Microsoft Office product coming. They have a release date, pricing, and some major changes. So look for Microsoft to start increasing its revenue.
Well, that's super exciting because I just happen to be extremely long and bullish on Microsoft.
Oh, yeah.
For a multitude of reasons, and Rohan covered a few of them. So I'm super excited about Microsoft's long term. If we come here and start looking at some of these gaps that we have in Microsoft, or sorry, these month timeframes that we see in Microsoft, it's been doing really well for quite some time. Let's look at the 5-year here. I mean, it doesn't get any better than that.
Oh my gosh.
I mean, that is absolutely gorgeous.
That is art in its pure form.
I could not agree more, right? So this is one of the things that you guys as shorter term and intra-month term traders and swing traders and long traders like myself, you guys have to look at higher time frames. This is crucial, extremely important for you guys to see what the annual year-over-year growth is looking like, right? So let me just pick the top of this candle here, rough estimate, 160 beginning of 2019. Close of 2020, we're at 226, $40+ a share.
Clayton, if I could just say one thing over here.
Go ahead.
It's very important for investors to be absolutely averse to the possibility of a pullback. It's important to not get scared, because when market volatility starts picking up, large institutional holders need to liquidate some of their positions in order to be in a financial position to purchase more risky stocks when they have more of a pullback. They essentially use Microsoft, Amazon, Facebook, and all these other companies as liquidity. So when they start to sell certain things off, it becomes a huge buying opportunity for us. So you see Microsoft at these current levels. Honestly, any point, if you're a long-term investor, is a brilliant time to get into Microsoft. If there is a large technical pullback on Microsoft on even a smaller time frame, what's going to happen is it's going to be a wonderful opportunity for people like you and I to get into a long position.
So I could not agree with that more. He's preaching right from any Bible that I'd ever write. So that I could not appreciate more, Rohan. You're hitting all the nails I have right on the head. Now, I'm going to make a statement, and this is based on technicals, but for some of you long-term traders, you all very much prefer shares, which is completely fine. With more expensive stocks, I like to leverage options. And like Rohan mentioned, when we have these big technical pullbacks, that is when I am the absolute happiest, because I'm deploying the cash that hopefully I've been able to take from profit. And in about a month or so, those positions will be doing very well based on our current market. It won't take more than 2 or 3 weeks for Microsoft to recover and be breaking all-time highs if it's pulled back. And that being said, in this past week, Microsoft has pulled back. And for those individuals who are trading, but you're still long-term shareholders or investors, you guys really need to start setting limit sells that are in extended hours. For example, 293 was the lowest we have seen, and this was right at pre-market. And if you had a limit sell for a hypothetical 294, 293, you might just have gotten it. And you don't have to put your whole position in. You can leg in, which is good. So, and conservative. It's been a while since we saw 293, right? And I wake up every morning at about 5:30. So I always look at pre-market first when I'm waking up. And there are times where I'm able to get those share positions in, but I go straight to the gym. And that's how I try to get my day started. But you guys got to focus on the technicals here and what's being provided to you. And, your brokerage account usually is not going to really show you that Microsoft hit, X, Y, and Z this past week in pre-market, after hours, intraday, et cetera. So you guys got to see these charts. You have to pull them up. You have to see where these entries are coming from and what's available. And if you think something's going to go down in pre-market or after hours that you really just have to take advantage of, which Microsoft at 293, 294, I was all over it. That was my largest buy because that was more than $10 a share drop from the highs with Microsoft. Every $10 a share drop from Microsoft, I pretty much buy. All right. Doesn't take a whole lot of brain power to figure out that I want Microsoft, and that's a good price for me. So Rohan, if you don't mind, give me one more stock for QQQ or VGT, and I think we've made our point for this week.
Absolutely. Let's go right into Amazon.
Okay. Big boy Bezos, baby.
Haha.
All right. So now Bezos is no longer at the helm, but still pulling the strings for sure.
Andy Jassy.
There again.
Andy Jassy.
There you go.
There we are.
So what do you have to say about Amazon? Why'd you pick it?
Let's see. So obviously, as you guys know, Amazon being the large consumer discretionary tech behemoth that it is, after earnings, had a very solid, nice drop, as you can see. And then it continued to drop a little bit more, found its base level at a support from previous price action, and then used that support level to bounce back to where it's at currently. So as you can see on Clayton's chart, that support level that he's highlighting is price action from a previous support level where it used to go up to higher highs. So essentially looking at price action and how it correlates to what the price action is trading at right now is extremely important towards finding an area on the chart where you want to go long. Now, if I were a responsible trader, what I would have done after that initial earnings drop is, let's say I had $1,000 to put into Amazon. I would have put $500 at that first initial, drop. Then after it started to go down a little bit more, somewhere in between that first initial drop and that absolute low that Clayton has, I would have put in another position, cost averaging into a trade that allows me to see fundamental success in the future. So obviously, as you guys know, Amazon is the absolute, I want to say, monopoly of the market. And it has competition in almost every single segment. And with its new Affirm partnership, rather, it should see higher highs because buy now, pay later is an absolutely growing industry. Amazon, ladies and gentlemen.
I could not agree more. And just to add to his point, this is exactly how I played Amazon. And also, I want you guys to really start to understand a different perspective. And if you guys need to start reading books to understand this, a great book that I've read all of 30 pages of, to be honest, that has completely changed my perspective on trading and my perspective of the big banks and the people with the real money, is a book called Follow the Smart Money by the Nigerian twins. And they are on CNBC all the time, rocking that ponytail, ripping those options. So what they say is, and they follow unusual options activity. How I've shifted that over to my perspective is when we have a whole slab of banks, right? All the big ones, and you can pick from your imagination of all the ones that could have created a price target for Amazon. And I guarantee you they pretty much did. So right before their earnings, there's a bunch of price targets that came out. And right after their earnings, there's a bunch of price targets came out. And all of these price targets were super high, 3,800, 4,400, 4,200. And then the earnings came out, and right before the earnings, a lot of banks slightly downgraded Amazon, right?
Does that even happen?
And then this BS pulled out, right? That's one of the most manipulated things I've ever seen in my entire life.
Hey, as an investor, I love it. I would love to buy Amazon at a 3,100 level. That's just me.
No, I'm with you 100%. And here's how I played it, since we're talking about technicals, and then we'll finish off this meeting. So first position, I gave it a day or two after the immediate pullback, right? Which is about as manipulated as it gets. All right. The market movers said that they wanted to pull Amazon down. They wanted to sell it off a little bit more to see how low of a price they could get. And then they just bought all of it up at this major support level that Rohan was talking about. They bought it all up and went damn vertical, right? Half a month, it recovered almost all that drop. Unbelievable. And then obviously we're in a red week. So guys, you got to start looking at higher time frames so you can see how the banks operate with these big companies. And I started my position here. Rohan was talking about utilizing 50% first when you're not entirely sure about the price movement of the stock post and earnings like that. I couldn't agree with him more. But I'm even more conservative. I am horrified of losing. I love winning. So there's only wins and lessons, and I'm learning that. So I legged in here about a tenth of what I wanted to put into Amazon. And I was buying 4 to 5 months out. So I had plenty of time, right? We came down, got very, very close. And I was legging a little bit in the middle section. But my last and final largest legs into my bull put credit spreads, which we will also go over this week. And I did not purchase any long calls, high delta calls like I normally do, because Amazon is really freaking expensive. Debit spreads would be phenomenal for Amazon because they're just long calls, but cheaper. Selling an out of the money call, buying a long call, And the difference is what you are debited, but it is cheaper and it does cap your profits. That's the kicker. So legged in appropriately. This was my final leg. I sold my final leg position when it got to my previous entries, and I got rid of my first entries up into the 3,500 range.
Beautiful
I
play.
was happy as a clam. And that was as safe as I could possibly trade Amazon, knowing how volatile this beast is. Rohan, any final thoughts?
Any final thoughts? Clayton, I know you're talking about reading a book, so I have another good recommendation for you guys. I'll let you in on a little secret. Not a lot of people know exactly what happened in the 2008 financial crisis. It pays to know what happened in the market, in the government, how these things went down. As a result, I'm going to recommend reading Meltdown, a comprehensive review of the 2008 financial crisis. Really gives a large understanding of what happened, mortgage-backed securities, how lending occurred, what happened that caused a bear market. Read it. It'll help.
Guys, you got to start understanding the broader picture here, right? We are a tiny piece of the economy, but there's a lot of big money and small sections that also run our economy and specifically run our stock market. So as soon as you start following the big money, following the smart money, then you will start to understand why Amazon can drop $300 a share on a bad earnings, because Amazon won't be making as much because COVID's not going on, and people are getting out of their houses. Whatever the bank needs to feed us for us to, eat the soup, right? Guys, thank you so much for joining us. Rohan, it is an absolute pleasure to have you, and I really and always appreciate your insight. Thank you so much again for joining me.
Thanks for having me.
Yes, sir.